Welcome to Talk Tickers. Today, we're diving into what might just be the turnaround call of the quarter, Myriad Genetics Q2 2025 earnings. This is the one that really reset the whole story for the company, almost overnight.
Okay, you have to start right here. Look at this number. The day after their earnings release, August 6th, the stock just exploded, up over 46% on huge volume. Now, a move like that, that's not just random market noise. No way. That's a massive signal that something fundamental has shifted, and believe me, Wall Street is paying attention.
All right, so how do we even begin to unpack a move like that? Here's the game plan. We'll start with that initial shock to the system. Then we'll hit the headline numbers that sparked the whole thing. After that, we're going under the hood to see what's really driving the business. We'll cover their big pivot to cancer care, and then we'll wrap it all up with what we're calling the next call.
All right, Section 1, a shock to the system. Look, this was not just your average relief rally. For a company that has been under so much pressure, a jump this big in one day, it tells you the whole market sentiment just did a 180. So the big question is, right? What on earth did investors suddenly see that they were missing just the day before?
So that brings us to the headline beat. It all kicked off with the top-line numbers. Let's dig into exactly what lit the fuse here.
And here they are. Myriad served up a clean, decisive beat across the board. Look at the revenue, $213 million versus the $202 million Wall Street was looking for. That's a solid beat. But the real stunner? It's that adjusted EPS. The street was actually bracing for a loss of a penny a share, and Myriad comes in and posts a profit of 5 cents. That right there is the kind of surprise that makes everyone stop and completely rethink their thesis on a company.
But hold on a second. If you were just skimming the headlines and saw the official GAAP number, you'd be scratching your head. A loss of $3.57 a share? It looks awful. So, understanding why there's this huge gap between the massive GAAP loss and that surprise-adjusted profit, well, that's pretty much the key to understanding this whole quarter.
So what's going on here? That huge GAAP loss? It was all because of a massive non-cash impairment charge. Think of it like a one-time accounting write-down. The company had to take a $317 million hit on paper, mostly because the stock price had fallen earlier in the year. It has literally nothing to do with how the business is actually performing right now. So that adjusted profit, the non-GAAP number, it just strips out that accounting noise. And what it revealed was a core business that was actually really strong. The market was smart on this one. It looked right past the accounting fiction to the operational fact.
Okay, so we've got the headline beat figured out. Now it's time to pop the hood and go a level deeper. If this is a real turnaround story, the evidence has to be in the details, in how the different parts of the company are actually performing.
So Myriad's revenue pie is basically split into 3 pieces. You've got women's health and oncology as the 2 big ones, pretty much neck and neck, and then mental health is a smaller but still significant slice. But here's the kicker. These 3 businesses are not all pulling in the same direction, not even close.
And this chart just lays it out perfectly. It's really a tale of 2 companies, isn't it? On one hand, you have a part of the business that's growing, it's healthy, it's what you want to see. And then on the other hand, you've got a segment that is really struggling against some major headwinds. Let's put some numbers to that. The oncology business, specifically their hereditary cancer testing, it's firing on all cylinders. We're talking 10% volume growth year over year. That's strong. But then you look at GeneSight, their mental health test, revenue down 12%. And that was driven almost entirely by a negative coverage decision from a major insurer, United Healthcare. That hurts. But, and this is a really important but, look at the gross margin, 71.2%. That's up 160 basis points. That tells you that for every test they do sell, they're making more money. The underlying economics are improving.
So what do you do when you've got one part of your business firing on all cylinders and another part facing major challenges? Well, you pivot, and that's exactly what Myriad's management is doing. This split in performance perfectly sets up their new strategy. They are going all in and doubling down on what's working, and that's cancer care.
So the CEO gets on the call and he lays out this new 3-pillar strategy. It's super simple, but really powerful. First, accelerate growth in the cancer care continuum. Basically, step on the gas where you're already winning. Second, grow the other businesses, prenatal and mental health, but with discipline. In other words, make them profitable, but don't let them become a distraction. And the third pillar is the payoff for doing the first 2 right. Deliver sustained, profitable growth. It's a crystal clear message of focus to the market.
And you can see here, the CEO, Sam Raha, basically said it himself, word for word. The core of our updated strategy is to drive accelerated growth and profitability by focusing on the cancer care continuum. I mean, you can't get much clearer than that, right? He is telegraphing to Wall Street, look, we're not trying to be everything to everyone anymore. Oncology is our future, and that's where the resources are going.
And hey, this isn't just talk. They're backing it up with a concrete product roadmap. Check this out. In the first quarter of 2026, they're launching a new AI-driven prostate cancer test. And then, in the first half of 26, they're dropping their new ultrasensitive MRD test. MRD, by the way, is a huge deal. It's for minimal residual disease, basically detecting cancer recurrence at the earliest possible stage. These are not just Me Too products. These are potential game changers in massive high-growth markets.
Okay, which brings us to the most important part, the next call. So, what does this all mean? Where does the stock go from here? The market just placed a massive bet that this company is turning around. Now it's our job to figure out if that bet is going to pay off. And it all boils down to this one question. This is the million-dollar question every single investor has to be asking right now. Was that 46% pop a real, sustainable inflection point, or was it just a one-time relief rally, maybe a bit of a short squeeze, after one good quarter?
And you know what? There are really compelling arguments on both sides. The bulls, they're looking at this and saying, look, the margins are getting better, they finally have a laser-focused strategy on a hot market, and they just short up the balance sheet with a new loan. But then the bears come back and say, not so fast, that GeneSight problem isn't going away, launching new products is always risky, and hey, let's not forget, even after this huge jump, the stock is still way down for the year. It's a classic bull-bear showdown.
So after weighing all of that, here's our take for the next call. We're giving this stock a market perform rating. The turnaround story is absolutely compelling, but you just can't ignore the risks. And that leads us to a pretty interesting trade idea, a pair trade. The idea is you go long Myriad stock, but at the same time, you short a broad diagnostics ETF, something like the XLV. Why? Well, the whole thesis here is to isolate Myriad's execution story. If management pulls off this cancer-focused strategy, the stock should outperform the rest of the sector regardless of what the broader market does. You're basically making a pure bet on the company's turnaround while hedging out all the other noise.
And as always, just a quick reminder that this analysis is for informational purposes only. This is not financial advice.